Is it fair to say we are seeing signs of progress now on this trade issue?
I certainly think we are, and it is a very positive sign that a trade deal was done between the UK and the US. There's also been indications of trade talks with India, Japan, and so this is certainly more positive than where we were a month ago. I do believe with China it will be a bit more complex. One of the key issues of the trade deficit that US has is with China and the Asian economies, and that has been a particular area of focus of the tariffs. We've seen the ratcheting up of pressure, so I think perhaps talks might be a bit more fraught with China, but certainly the overall direction is very positive.
What should we expect in terms of news flow at the weekend as those US-China talks get underway? I think this is what the market is ultimately focused on right now.
Absolutely. I think that there's such a breadth of discussion topics, really. There could be some initial indications of at least pulling back some of the tariffs, and that will be the area of focus. Which other areas are we going to see some pullback? And there are areas that the US will take time to substitute with domestic production, and increased imports from China will be important to reduce inflationary pressures, not only for consumers but for companies as well. But I think we also have to be realistic as well. While we do believe that we've passed the peak of US tariffs, we still think that the path might be bumpy, and the end tariff rate still significantly higher than where we started at the beginning of the year. So we also have to check our optimism, because higher tariffs, we assume around 15 to 16% in the US, where they'll end, will still have a marked economic impact.
Okay, so how significant is the economic impact going to be? This is what markets are attempting to price as well, and of course what the global central banks are ultimately trying to navigate too. This week we saw the Bank of England's cutting rates, the Fed also holding steady. That rate differential could have implications for our region as well. So how bad is the downturn going to be?
Well, there's a huge amount of uncertainty, and as the Fed had outlined, we're starting to move to the next stage where the trade talks are starting. We haven't seen much hard data come out, and it will take time, because the Fed will not just move on one data point or 1 month of data. So our view is that the Fed will be on hold for a while. We don't expect to see any rate cuts in June, and likely July seems early. So we now believe that the rate cuts will be more towards from September onwards. We only see 2 rate cuts this year, but it's really going to be a wait and watch. And it's not only the direct impact of the tariffs, it's the impact on sentiment as well that's going to be critical.
Indeed, and that drives the market too. Monica, really critical week for us in the region coming up. We have the president descending on Riyadh. He's also going to be in Qatar and the UAE. Lots of news flow to be looking out for, but what's top of mind for you in terms of the overall market impact? What should investors be looking out for on this upcoming trip?
Well, we expect to see a lot of announcements. And I think in a broad spectrum of areas as well. I think looking at the UK deal, what was particularly positive is the removal of tariffs on metals, on aluminium and steel. And as we've talked about before, that's a key area of exports from this region to the US. So if we also see a similar move, that will be very positive. Though we do highlight that UAE and GCC exports to the US is very small in GDP terms of the Gulf or as a percentage of overall exports. But nonetheless, it will be positive. But we also expect to see a lot of investment deals being announced. And both ways, we've already seen the UAE announce a number of investments in the US in areas such as AI, energy, aluminium, but also we think that there'll be opportunities for US companies to increase investment, including in mining in Saudi Arabia, But the financing side will be also very important. With oil prices where they are, Saudi will look at more financing support from America as well as they look to progress with their investment program.
Since we last spoke, oil has fallen below $60 a barrel, and you have downgraded your own forecast on where you expect oil to land by year end. So walk me through that and the overall translation for the GCC economies. Yes, we have seen this part of the world becoming less reliant on the oil price outlook, but at the same time, this is still absolutely critical for the likes of Saudi Arabia and the UAE as well.
Absolutely, and we've reduced our Brent crude forecasts for this year, average oil price to $65 a barrel, and next year to $62.
Ouch.
So the critical point really is OPEC compliance, and until that is restored, we expect supply to continue to rise. But what will really be critical is the oil price sensitivity at the moment. We have made downward adjustments to our economic forecasts, but the UAE looks still relatively solid. We remain very positive. We continue to see both fiscal and current account surpluses. But for Saudi Arabia, where we've already seen in 1Q a large jump in the fiscal deficit, this lower oil price will be significantly more critical.
Top macro risk for the region right now? Is it Trump or oil or something else?
I think certainly oil. And as you say, you know, whether it's government revenue or export earnings, that's very, very critical. I think if we do see more signs of trade deals, that will provide some support to the oil price. But also the fundamentals matter. So we will still look at the demand growth. There's still going to be a lot of global uncertainty, but also the OPEC plus supply coming in. And, you know, really the critical question for me is, will this cohesion within the bloc be restored? And that's going to be critical.